Two ASX sectors have shown huge rebounds recently, moves we haven't seen in years. And that means it's time to go and find out what's going on, because the answer could spell massive opportunity if you time things right. Backed by our government-accredited share trading education, we'll show you the professional stock market approach that has seen our commentary feature in major media outlets Australia-wide. I am Philip Tortevsky, joined by senior analyst Janine Cox and Blueberry Markets Zoran Krezovic, and we are Wealth Within. Good evening.
Good evening.
How are you?
Fantastic, thank you, and looking forward to another great show.
Yes, we've got a very interesting show talking about rebounds. Zoran, thank you very much for joining as always.
Thank you for having me.
You're a bit of a fan favourite at the moment, which is awesome, but let's dive right in and get some more of those comments. Which two sectors are we talking about that have seen massive upside recently? I want to start here, Janine, because we've seen a bounce on the market. Not all things have been equal. Two have really stood out insanely right now.
Well, it's no secret right now, is it? No. Tech is a leader, and that's what we talked about on yesterday's show and covered a few interesting stocks there. But real estate has made a bit of a rebound, but some stocks in particular better than others, so we should get into some of those. Yeah,
I'm going to get your comments in a second on which sectors you think are ones to watch for 2026, the second half. But let's get into the charts, because I know you want to show some things, Janine, in terms of these sectors that are flying at the moment.
Yep, I'd love to do that. Look at this one here. This is the real estate sector, just bouncing off that low recently. GMG is a big part of that, of being one of the heavyweights in the sector. You can see a nice push up over 3 weeks, including this week. I really want to see the close nice and strong this week, just to confirm that the move up is likely to continue. But this has come off a really nice support level around about where those two lows are at the moment. So we're expecting a bit of a bounce off that low. That's for real estate, and I can just list off the stocks. GMG is one of them. GPT, Stockland, which we're not going to cover tonight, that actually had a really steep fall, and something I've never seen on that stock except for during the GFC, which is interesting.
But does this again put another tick in terms of why you need to be looking at price action? Because if you were sitting here without monitoring what's going on and looking purely from what you're reading out in the news, interest rates are on the rise, that doesn't usually bode well for a sector like this. But to see such a big bounce, I mean, for me right now, this is why it's so important, if you're not looking at price action, to be looking at it, because the stories you're reading and what's actually going on, they're all in this mix right now. Even oil and gold. It's you got to have your eye on the ball.
You do definitely have to keep watching those signs. And if we go back to the GFC time, we can see that the real estate stocks were booming, and at that time CPI was increasing, interest rates were increasing, but the real estate sector kept on going up.
I know we're going to get into some amazing stocks in a second. Do you want to have a look at the tech sector, Zoc? Because that's the other one that really has been the leader in terms of the recovery or the big bounce we've seen over the last few weeks.
Yeah, we've seen a good reversal on here as well, just like on the prior one as well, real estate, and we can actually see that it's actually rebounded quite strongly at the moment. I think a good point to raise here as well is that we've seen actually NASDAQ do exceptionally well in the US, so it's actually really, really good to see that it's kind of coming into our market as well and spilling over. And as we know, tech sector has been a darling of the US equities for the past couple of years, and seems like we're actually catching some breath here locally as well, which hopefully is gonna bottom out and provide us with a bit of upside too.
Yeah, I just sticking on that, obviously, and you're right, the tech sector in the US hardly felt the damage that our tech sector felt. I think our tech sector, the way it fell, was the worst falling tech sector globally of the developed markets.
Not only that, sorry, my apologies. Not only that, our tech sector hasn't actually performed as significantly well as did the US sector as well. I mean, I do understand the comparison and the difference in terms of the stocks and the market caps and companies and market weighting on it. So that's kind of normal and expected. But I'm really hoping that we can actually hopefully now provide the upside and catch up that we're actually lagging.
Yeah. Now, on that point, are there any other sectors? Because obviously the hot topics right now are oil, gold, silver, and tech, and energy, right?
That's right.
from what you're seeing out doing what you do out at Blueberry, you see a lot of going on in terms of traders positioning. What sectors are you seeing that are flying under the radar maybe, or ones to stay away? I know for me, oil's been the big question mark. Everyone's going, oil's going to 300, 1,000, but it's not breaking 120.
Well, applying the technicals that we teach within the course, you can actually it was sort of expected, at least on Thursday, Friday, that oil was going to come back because it did a major reversal on the technical side of things.
Yeah.
We also can see a major gapping around $60 level, which is when crude oil exploded because of the actual Middle East war that erupted the end of February, early 2000 March. So whilst many people are actually still kind of see the upside on crude oil, I'm actually thinking that it's going to come back probably and test those lows. And I'm hoping and expecting that some sort of peace deal will come into the effect over the next couple of weeks. I think what markets are doing at the moment, they're positioning themselves where any prolonged peace or further agreements or further discussions are seen as a bullish sign. And we've seen that over the last week or so, globally and domestically as well. And that's why we've actually seen ASX run just around the 10% or 1.5% of the all-time high. So if someone told me that 2 weeks ago, I wouldn't actually believe it, right? But like, this is what happens in the market. I'd be probably focusing a lot, to answer your question, on the energy sector still. I still feel there is overall a lot more upside. The stocks like Woodside, Santos, whilst they might pull back in the short term, I think longevity-wise, breaking those long-term downtrends are very, very significant, and hopefully it can provide a lot more upside.
Janine, did you want to add something on that one?
Yeah, I think Zoran's got a really good point there, because if you think about how fast that sector's run compared to, say, industrials has held up really nicely, and that's another one that looks quite good. The energy sector, it's been replicating to a degree what the oil price has done, but it's holding up a lot better. So it's actually looking really nice right now. We were waiting for that breakout. It happened. So those traders who were following us would have done really well on this trade. And then seeing that come back a little bit further, perhaps, like Zoran's talking about, before it then takes off again. So it's just a waiting game now for any further opportunities. But I'd have to agree with what you're saying.
All right.
I'd be a little bit patient on energy sector, because, as you mentioned, it is overstretched a little bit too much for my liking. So being patient and providing a bit of a pullback could provide some great like entry signals for a longer term or medium term trades.
And
I just love, you knew what I was going to say, didn't you? I just love the way that this is unfolded on the chart. This is classic stuff that we see, and we're able to actually measure how high a stock can run from these sort of formations, which it's done. So, you know, anyone wanting to learn technical analysis, it would just blow your mind to see, you know, how you work these things out.
yeah, and I'm hoping as the conversation goes on, I can get your thoughts on gold and silver as well, because I know a lot of people are talking about that. We can try and sneak it in really quickly, but let's dive into some stocks right now. Janine, I know we're going to cover a stock each from the real estate and the tech sector, and we're not going to cover the ones we covered yesterday, so there's more for you.
BWP Trust is one that I think gets overlooked a lot.
Yeah.
But when we're analysing this one and having a really good look at what it's done, it's been far more resilient than some of the other property stocks. I mean, Stockland, for example, has plummeted. This one, it's just been in this sideways trend for a long time, but we know eventually stocks will break out of these trends, and at the moment it's been pushing higher. Another move above this recent high around that $4.10 mark will push it up to that all-time high. Anyone who's looking at this, it's more a slow plotter, right? That's the way I look at it at the moment. But it could just as easily repeat what it's done here. I mean, it consolidated, had a couple of bounces, and then took off. The cautionary note would be to just watch this low here, because any movement below that is not an opportunity to get this stock cheaper. It's then a caution about, you know, whether it could come back to these levels. But I mean, that level is pretty strong. You can see across there, it came back, bounced twice, had a nice move out of it, which is a bit of confirmation. As long as it holds above around this 380 level, which it's doing at the moment with the close this week, I'd be pretty happy with the way that's unfolding.
Yeah, and it's interesting when you look at these stocks. I mean, often they do pay a nice yield. Even these days, a lot of people talking about, I want real estate exposure, but, you know, buying a property's probably, you know, out of their reach, or, you know, it has a lot more capital outlay to get in. When you look at a stock like this, yes, some are residential, some aren't, but you get good yield, you get pretty stable price action, generally appreciating. I mean, when you're looking at volatility and risk, do you look at the real estate sector and think, oh, maybe a stock like this is something you can put in a portfolio?
And a lot more liquid as well. And I think we've discussed this on the show a few weeks ago, where just a matter of opening up your laptop or brokerage that you're trading through, and you can actually buy or sell, as opposed to tough times that might come and arise, and it might take you a lot longer. So you can always kind of compensate and find a good stock here, and essentially make most of it.
Yep, excellent. All right, you can take the tech one, mate. I think it's 360 is the next stock.
360, yeah, this is an interesting one. This is pretty much like a falling knife, and it's not looking too great, to be honest. I'm actually not a huge fan of stocks when they actually falling this much.
Let me ask you this, Sock, because the tech sector right now has come off a lot. So the opportunity is more of a reversal story. If this is the low, I know you're saying probably, right now it's fallen off quite a bit, but if this is the low for tech, does it at least provide some opportunity for those looking for the reversal play? And if it does, has it proven enough yet for you, or does it still need more to prove?
Yeah, so you raised some great questions there. Number one, I'd be watching this stock and putting on my watch list, but not necessarily I'd be trading. I think I've discussed a few weeks ago where I said, when I select stocks, I go based on green, yellow, and red, right? Red are stocks that I don't look at. Yellow is something that I might consider in the future, and green ones are the ones that are signaling a buy. So this one would be probably a yellow. And the reason why I say that is because it is falling a knife at the moment, and I would hate to get into a stock and thinking that we bottomed out, there is a reversal, and only for it to actually tip over again and create a lower high and take me out. However, in saying that, as the stocks do drop off from an all-time high and they do provide a significant pullback, if they are good quality stocks, then eventually they will provide your buy signal. So yes, to answer your question, I would be watching it, but would I be buying it right now? Absolutely not. And I can see 4 or 5 reasons here for not buying it. It's a clear downtrend. Hasn't provided a key support level on the chart as well. It's creating lower highs and lower lows, and a number of other rules that I can actually see here that we get to learn within the course itself. So I'd be watching it still very closely. 70% pullback on a stock is actually very, very significant. You guys would know what I'm talking about here when it comes to the price analysis, and I would love to actually consider some of the fundamentals on the particular stock as well, to see whether they're lining up. And if they are lining up, then the next level that I'd be watching is also this gap around $8.50 to $9 or $9.70, because I still feel that at some point they would need to be filled, and I'd be watching some key support levels as well. And another thing is also the prices, the volume is increasing while the price is actually dropping, which is obviously adding a level of conviction to me that sellers are in full control here, and that buyers are not supporting the move at the moment. So that's pretty much where I stand. Hopefully I was clear enough.
That's
I'm a little bit sluggish today for some reason.
It's good. There you go. There's a nice little sluggish chair break. But what's interesting is when you're looking at the different mindsets and the different trading scenarios, because one thing is also true, the closer a trader gets comfortable to looking at those reversal opportunities, I think the more risk, the more reward potential there is. Obviously buying at a lower price, higher reward potential if you're at the start of the trend as opposed to the end of the trend. So just to play devil's advocate a little bit, Janine, when you look at that stock, we saw some good ones like Wise Tech and Xero yesterday. Does this one fit in that camp, like that turn has potentially done enough or not yet?
Yeah, good questions. Let's have a look and just see something that's interesting, because we know with the ones that we looked at yesterday, there were some moves around that 20% mark. This one's come up around 31 off that bottom. So I think what's happening here is we're going to see a sector-driven rise, right? Yep. And we're already seeing part of that now. So if the sector can jump out of that low, and this is the big question, isn't it? If you look at the other stocks that we analysed yesterday, and if you thought, well, look, they could go, and for example, this one could go around 100%. That's its potential, in the short to medium term, 100% 10% rise. If that's the potential gain that you could get from taking this, well, what's the risk with it? Well, at the moment, we'd have to consider what the stop would be. There's no exact entry yet there. So the low here is around 23%. Well, how much do you want to risk to prove that it's actually going to go down? And that's not going to be what I say is going to be for everybody who's watching. It's an individual decision what you want to risk. But at this point, it's come down to a really good level. And yes, what Zoran's saying is there is a risk that it could come down to this low, but it's a question of how much do you want to risk and what is the entry strategy? Because I guess the concern too is, could it come down to the angle, back to the angle of this trend? Yes, it could. Could it unfold like this? If we come off this bottom here, and I'm suggesting it could come up to about $33 and then come down, back down to this level, that's a possibility as well, that it could do that, and it could go on to eventually make that low that Zoran's talking about, and that could happen in the next couple of years. It might not be, but short term, is there a potential there for it to rise? There is right now, given the strength of that support level. So far it's done a reversal off the bottom. We don't have a confirmation, I don't think, yet for an entry, but it would depend on what your rules are. Do you want to see it more of a bounce off that bottom as confirmation to confirm the lows in? It all depends on how much risk you want to take. Are you happy to take that sort of medium to higher risk with the potential to earn that run, or are you wanting to reduce your risk by waiting for the bounce and then it might take off? That's the other side, flip side of it.
I mean, playing a devil's advocate, it's done a reversal back in November 2025 as well, only to actually reverse and create a lower high and lower low. I'll just actually compare one thing before we move on to the next stock, and I want to have a look at an all-time high back in 2021 and how much it's actually dropped. So it's actually done 78%. So I'm not saying it's going to do it this time round, but if we are, history doesn't repeat, but it does rhyme at times. We still potentially got another 10% to go. But look, for me, it's not a buy at the moment. It's a bit of a falling knife. I'd like to see it consolidate for a longer period of time and create multiple entries to provide a good signal, and then I would actually get into the stock.
Yeah, awesome. All right, there you have it, some very interesting points. Now, if you do want to learn how to do the things the team have shown, especially get that risk and reward right, get that book right up. It's How to Beat the Managed Funds by 20%. It is free. You just have to pay the shipping, by Dale Gillum. The link is in the description in this video. But as always, please, if you do want to take things to the next level, go and check out the Diploma of Share Trading and Investment, our government accredited share trading course. There is not another one like it, so it speaks for what it does offer. And go check those testimonials out, because you'll see the amazing jobs that our clients and students are having. But let's now move on, but stick around shortly, because shortly we're going to give you some more stocks from those really, really important sectors that are flying at the moment. But let's now go for our trending topic time. Janine, what have you got?
Well, it's interesting, isn't it? We've got to really think about this now, because there's a lot happening out there. And should investors holding tech giant Apple Inc. have cause for concern? And what does this signal for this tech favourite? Well, following the announcement that CEO Tim Cook will step down from the helm, Mr. Cook's tenure spans 15 years in the role. He'll move to executive chairman as he hands over to the head of hardware engineering, John Turnus. Apple has been on a winning streak and has risen by around 1,900%. And under his reign, well, you'd say you'd have to have steered the ship well. But can this level of growth continue? And what can investors expect when Apple's share price has been stagnant for the past 8 months?
Interesting. I mean, one of the things for me with stocks is when you do get such a big shift or change in management, obviously the new person coming in, fresh ideas, maybe a different change in direction, and that can affect the share price. I mean, we've seen the flip side of that with WiseTech, how a CEO can help make the share price fall. By doing certain things, which we won't get into, but big shoes to fill.
Yeah, I'm just playing around with the chart here, and I've just bumped it because 100% can matter, can't? At this level, we're talking about 1,900, and depending on where I click on. But look, it was the time when he joined, which was around, I think, August 2011. and the Apple price has risen by all of that. So there's the sideways move of the last 8 months that we've seen. The trend is incredible. If we just look at how far Apple has risen just in the acceleration of the trend, it's gone away even from the angle of this trend. So therefore, there's a potential for it to go even higher, sure. But with news like this, what can happen? I mean, he's still going to be at the helm essentially because he's still going to be as an executive chairman, but it's a step out the door. And we often see when big, important, influential leaders leave companies that not long after that they tip over, which is why I wanted to show you all something. So if we look at CSL, we know that in the history of CSL there have been different CEOs there. We know that the previous CEO left somewhere around 2023. I think it was somewhere here in 2023. And we could see if I put a vertical line there, sorry, this is not the right one, but if I mark this with a vertical line, we can see where what's happened since. Now, CSL made incredible gains. I think that the previous CEO was there from somewhere about 10 years ago as well. So, I mean, most of the gains that were made under his tenure, and then obviously there was a sideways move, but we're talking hundreds of % gains while that was going on. And now it's a big decline. Obviously, there are other factors there. There's the sell-off, but the sell-off of the vaccine business was made under the current CEO's tenure.
Was that locked in? Because I know they were talking about it. I don't know whether
it was only announced in 2025, from what I can find. There may, unless you found something earlier, but that's what I think. 2023 was when the CEO changed, and then 2025 was when the announcement was made
to sell off the vaccine arm. But I don't know whether they have yet. I know they've been talking about it, but I'm not sure whether they have,
Yeah, I'm not up to date with whether they have or not. Yeah. All I care about right now is where it's going from here with the current CEO. So I was thinking, with this slowdown in terms of the decline, that we may actually be seeing a bottom in there. But also going back to Apple, what's that going to mean? We know that we're coming into a period where we could be the US market may be much closer to a top than our market, or they may peak at the same time. We don't know yet. But we believe that next year in 2027 will be the top of our market. Now, if the tariff scenarios caused another cycle to become bullish, which I mentioned to you on a previous show, and I've been saying this for a while, that 2029 could be the top, then obviously this is going to extend, and it's not going to be the scenario that I'm expecting to unfold. But all I'm saying is that to us, this just increases the potential for the stock to go sideways at least.
From a personal perspective, I still think the current CEO he's obviously going to be an executive chairman, so he's still going to be on the board, which means that he will still have heavy influence. I would also like to believe that Apple, at the size and importance of the brand itself, wouldn't actually put a new CEO without having discussions prior to actually making this announcement. So if a CEO was to leave for good and have no involvement in the business, I would expect probably for that to fluctuate and impact the share price of Apple. But in this instance, I think it's potentially just a knee-jerk reaction. I think it's a buying opportunity, and I think in the long run, Apple is still going to be then super competitive in the market.
All I'm saying is it doesn't matter who the CEO they put in, even Apple will succumb to the overall cycle when the crunch eventually happens.
There you go.
Crunch. Did you like that?
Crunch, yep. And I think all I'm saying is watch the chart and you'll find out the answer. But if you want the skills to analyse the stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Zoran, the next one I believe is DRR, Deteria. Or
Dicadata
Limited, yes. It's actually, on the monthly chart, it doesn't look too bad because whilst it is in a downtrend, I still feel this stock is actually coming to the point where it's a critical support level. Support level seems to be holding quite well around $8 or just under $8. So I would probably consider this as a strong support level. I would like to apply additional price layers and price analysis to indicate that, you know, there is a cluster and everything else that we teach within the course. I can see a major high at around $16.50, and I can see major lows here as well, which is not necessarily a bad sign, especially if you do find quite a bit of support around $8. If the stock can actually potentially push a little bit further down or create a low at these prices and start reversing, the next level that I would like to actually consider is around the $11 mark. I think if you break that, then there should be quite a bit of upside. On weekly chart, it looks like it has actually provided a bit of consolidation, sideways consolidation. I haven't done much research on the stock itself to find out in terms of the fundamentals, but technically, I feel like we might be out of the woods. It's maybe a little bit early to tell, but hopefully you can actually find some ground here and go towards that $10, $11 mark. If it does actually consolidate and has the upside run, then I would like to think that this stock might be actually starting a new cycle, bullish cycle.
So watch 10, 11 short term. Past that, then we could be long term up.
Then we could be looking at $15, $16.
All right, awesome. Janine, next one.
All right, the next one is GMG Goodman, which is a favourite. And this one's actually had a stellar run the last few weeks, and this looks really nice in terms of the move that it's made off that low. It hasn't fooled around at the bottom, wasting any time to get going, and it's a steady rise. It's not crazy like this sort of volatility that we saw that was just a knee-jerk reaction and then the eventual pullback. Students will know that this pattern is critical and important for a turnaround, and it's found support at a really important level. So I'm liking it from that point of view. The only thing that's sort of hanging over its head at the moment is that there's this high, which is that prior all-time high from the GFC. And remember what we were talking about earlier about how these stocks just ran all the way into 2007. Admittedly, it was early 2007, came back, tried to go higher. This was in October 07 when the market capitulated. And then you can see the heavy fall that happened. Now, the RBA was increasing rates around that time and continued to do that past the top in November 07. So that really broke, you know, the sector.
Back.
Yeah, it did. And that happened eventually, but I think we're really in the early stages at this point. It's still too early for that at the moment, and I think GMG's got the potential to come back up to this level and break through it.
Awesome.
Do you know what's going through my head at the moment? The moment Janine mentioned that this stock reached an all-time high in 2007, and that was just prior to the GFC. Now imagine if you bought that stock at the market top around $30 mark, and you actually didn't sell it, and you held it all this time now. It would take you nearly 20 years or so to actually come back to the break even. And time is money. So my question is, do you want to invest into education and basically learn the craft, and then you can get out of the stock and you can actually re-enter at much cheaper levels? Or do you actually want to take the losses or potentially hold on to it for nearly 20 years to break even on it?
Yeah, it's crucial. I mean, we talk about it all
crazy,
the time.
right? Like, because it's been in a free fall. I'm sure, and I see all the time, people fall in love with the stock or they get emotionally invested into their positions and they hold on to it with a hope. It will eventually come back to the break even, and at times it never does. This stock has come back, but how long it's taken and how many other opportunities there were in the market to make money, it's crazy, isn't it?
It's a big point you're saying, because it's the hidden part of what we do here. I mean, you know, when you talk about the way investing is sometimes positioned, it's, you know, you buy and you should always be in the market, and if you stay in the market all the time, that you're not going to miss out on the good days, and there's all these statistics that push that. But when you look at things and when you say what you've just spoken about, I even talk about our index. Our index from 07 high to get back to break the all-time high took 11 years. Now, 11 years for someone is, you know, the end of their investment journey. If you're retiring on the GFC correction, you don't have 11 years to get it back. And so this is where being active, knowing what we're saying, and you know, looking at charts, looking at price, I think it's a bigger story in what you're saying, why it's so important. You need to know how to do this, because it can make a difference, a huge difference to your life. Because at the end of the day, one thing we can't have back is time. And being able to actively manage, I think now slowly after all these years is finally people are going, you know what, there's actually merit to this, and it's more important than I think, or than I realised.
Well, just based on one strategy, I can see 4 exits on GMG on monthly chart, right? And then I'm sure if you break it down into weekly, it's going to provide you more exit points.
Yeah.
And as a percentage, I mean, let's just have a look at that just to bring home what that meant. It fell almost 100% of its value. So nobody at the top had any idea that was coming. And that's why we talk about what we do, isn't it?
Yeah. Yeah, it's so important. Risk management is king when it comes to this.
I always keep saying it to people because when I speak like all the time, I say the biggest difference between being an average trader and a good trader is the risk and money management and your psychology. If you can master those 2 aspects, then you got high probability of being a successful trader. And like the other one is like people always cut their winners short and they let their losses run. Like I see it all the time because they never want to be emotionally wrong. They always hope, as opposed to confirmation, that hoping the market is going to come back in my favor, hoping I'll get out on the break even. Are you playing to break even, or are you playing to make money in the market?
That's a good lesson.
It's the biggest shift. Do you want to be in this to be, like we said it yesterday, do you want to get into this to be an economist, to be right or wrong, or do you want to do this to make profit? And they're 2 very different things. But we've spoken quite a bit on that. Let's move on to our next stock. Janine, what do we got?
Yeah, this one's Bravura Solutions, BVS. And we were saying before the show, we haven't looked at this one for a while. And what's really interesting is how it's actually coming back to the angle of that trend moving up. And it seems like this overall move is finished and it's on a new run. So that's one of the really positive things about it. And the other thing that I like about it too is the fact that it started its history out here, but it's well and truly above that point now, which I like to see as well. There's a bit of sideways consolidation going on here at the moment, and this is not an ideal scenario for it to be in because it could fall below the angle of that low. But there's some really good opportunities here, I think, once it starts pushing up above around that 250, 260. This could be something that's really, really nice. It may just continue to track up the angle of that trend.
Yeah. Sorry, Zoran. Yep.
No, you go on.
No, mate.
I was going to say, aside from Apple, this is probably my favorite stock. I'd like to think so. If it can hold above $2, I can see many positive things in this.
Yeah, awesome. How about you do the last stock we've got for the topic? I mean, we've got more amazing stocks coming in for the question section, so I think one of my favourites is in there, but let's get to the last one.
GPT, I don't know why, but I'm never too big of a fan when I actually find stock being very super choppy. And this is what I find, like there's no clear direction here. I would like to think, or from my personal perspective, this is a better stock if you actually want to do kind of intraday or short-term trading. As opposed to a longer-term view. Even though if significant and key levels are broken, it can actually go for a stellar run. So the point that I've been looking at here is $6 to $7 on the upside. On the downside, I'd be probably looking anywhere around $4. And my last major point would be the low of 282. If the stock falls out of bed and breaks all these levels here, plus the support levels, then I would probably like to think they might go all the way back and test the lows of 182. But let's focus on the upside. On a shorter term basis, there's still a bit of a gap yet to be filled. It's probably likely to do so over the next week or 2. Overall, it's not for me right now. It just doesn't look too right. It's been falling too hard. It has provided a bit of a bounce back, but I just can't see a clear level here where it can hold at the moment. And I feel like it's super, super choppy for my liking.
Well, Janine's just about to put something on the chart there.
Yeah, so look, there is actually a bit of a level underneath it, but it depends where you want to, see that level in terms of where you think the strongest level could be. I think it's somewhere around this level here, which is where it's currently trading at the moment. And so I think this is really the time for GPT. If it actually can turn around at this level, this is it. Otherwise, it could come back here to around that 420 before we know where it's going. But look, if it holds here, I think it's the best possible scenario for it. And just looking at the way that it's moved up,
In trend.
There's a nice trend there. It might be pushing it to a point. If it breaks through that line, then long term, we know that this stock is really looking good. This is actually one that I think is better from a trading point of view than, like Zoran said, than anything else because of this sideways move. But, you know, because you get some of these really nice runs, and if you look at what happened, if we come back here, we can see that this run here, there was 70%, and you wouldn't think on a real estate stock like this that you get that, but you know, you got 100% off that one, off that bottom there. You know, there's about 40 off that one, and it has done these sorts of moves over history. There was a decent pullback there. There was about 40% there. So, you know, I think that it's been doing these sort of moves, and that means that at the moment we can't discount it yet. I think we've just got to wait to see if, given that it's at crunch time right now and GPT's going up, you know, looking at that sector analysis and thinking, well, if the other stocks are moving up, how much have they moved up by? GMG's obviously moved up much more. But, you know, at this stage, like Zoran said, it is a bit too early to tell, but we've just got to keep an eye on it because it could be a good opportunity if it takes off.
So it sounds like this is make or break.
Yeah, I mean, you know, Stockland looks just shocking. I mean, I just bring up Stockland just quickly as a point of comparison because I think it's interesting to see, but if you just look at what happened with Stockland, there'll be some short-term traders thinking that, you know, that could be a good opportunity, but that's just totally out of character with the, you know, the history of what it's done over time.
Yeah.
So I think from a risk point of view, this one was tracking nicely, up, down, just looked beautiful, but it's changed personality now. Whereas I think if we look at GPT, it's still doing what what it's done in the past. It's not too out of character with those moves yet.
Yeah, fair point. All right, before we move on, favourites, Zoran?
Favourites, I'll definitely go with what was that one?
BVS.
BVS.
Yeah, that's right. I'll go with I'll go with that one.
Awesome.
BVS, I think if you can consolidate around $2 mark, I can see a lot of upside on it.
All right, Janine?
Yeah, I like BVS as well, but, you know, like someone who wants a bigger stock, I'd be watching GMG for when your rules trigger, but you've got to have good rules on it.
Yeah, awesome. All right, now moving on shortly, we're going to get into our hot stock tip from Zoran, but first, let's answer your questions. David writes, can you take a look at MPL? I am considering entering for a medium to long-term trade. I like the fact that it held above $4 during its pullback and would look to enter if it can break trend to the upside. All right, Janine, Medibank private.
Yeah. Look,
$4.
I mean, this has been a huge controversial stock. I think it floated somewhere around $2 or something, didn't it, originally? And I mean, this is just gorgeous, this sort of angle of the downtrend, and it's really consistent and very nice. It's come back to a decent level there at around $4, which you like to see. I think this looks quite good and could be quite promising. A bit of a pullback would be nice underneath that trend line before it takes off. But yeah, I'd give a tick for this one.
Would you, I'll get your thoughts on, would you agree that if it holds $4 is the level that you need to watch for it to hold, and if it breaks this trend for a medium to long-term trade, you agree with that?
I think so. Yep. Thank you, whoever sent it through, and well done.
Yep.
I would agree with that. I agree with Janine as well. If there is a bit of a pullback and then a little bit more momentum, there could be a good entry around 480. At the moment, you got to respect the trend, which is down. It's obviously hovering and brushing off that downtrend line, which also needs to be respected. But we can see a bit of momentum building up on the volume side of things. So well done, mate. Good analysis.
Yeah, awesome. There you go. All right, Jonathan's email is next. I've been looking at CBA, which has historically been one of the strongest and most reliable stocks on the ASX. Do you think it's better to wait for more confirmation of an upward trend, or is this the kind of high-quality business where you can justify buying during weakness, knowing it's likely to perform well long-term now? I saw you shaking your head a little bit.
Yeah.
It's a good question, right? Because
it's
people
a great
think
question.
It's a good company, I'll just buy it whenever.
Yeah.
CSL, you've seen that lately?
So I'll answer the second part of your question first. And I will say that not necessarily just because it's a top 20 or top 50 stock, it's liquid, it's profitable business, it's a good buy, because these stocks can go into multi-month or multi-year downtrends as well. We've seen that with CSL. That's a perfect example. Yep. It's a falling knife, and just because you get it at a cheaper price, that doesn't mean that it's not going to be go lower, lower, and lower. And we don't know how long it's going to take in terms of time as well. So CBA is a great stock. I think you need to ask yourself a question whether you're building a portfolio for growth, income, your age bracket, and also in the timeline as well. Are you trading this for a short, medium, or long term? If I had to pick out of all top 4 banks, CBA is always a favorite because they do exceptionally well. They've got a good management and they leaning more towards the techie side of things as well. So there's a lot of improvements, and they actually an industry lead when it comes to the financials and banks. So that's a good choice. Whether it's a good buy at the moment, it looks like it could be. It looks like it could be on the technicals. I think on the monthly chart, we can actually see some buy triggers there. But I would also like you to be considerate and take into consideration the fact that obviously banks or financials are grossly overvalued at the moment in general. Whilst there is actually rebounded and moving upwards at the moment, unless it takes an all-time high, it could also tip over and come back a little bit more.
Yeah, all right. Did you want to add something on CBA?
Just that, if the big picture cycles in the market are correct, then we know that there's got to be an acceleration towards the end, and we're running out of time for that right now. So, I'm not surprised to see CBA accelerate away as it's done. And then it's a question of, if you took it, how much are you risking? If you took it at sort of around now, where would you set the stop? That's really up to the individual to decide, but there's a low right there, not far away. It's really a question of where your upside is and how high you think CBA could go. I think it's got the potential to go into around 220. So,
here's a question for you, because it really brings this to light. For someone looking at that strategy, saying, I'm looking at high quality companies, I just want to buy them and invest in them because they're high quality. Do you think over the next 2-3 years, with what you're saying about markets and tops, somebody trying to employ that strategy is going to be quite dangerous, just looking to buy quality stocks? I've got money sitting, I need to put it into the market.
Yeah.
Is that?
I mean, generally at this time we wouldn't say go long term.
Yeah.
It's more short to medium term. But I mean, this book is a classic example of what you can do for bank stocks, looking at trading them.
Yeah.
So that's a really good start for people if they're wanting to, and it provides that bit of protection when people need it most, and when the market does eventually turn.
All right.
Everyone's in for a long term until they're not.
Yeah.
You know what I mean? Like you're buying, you got a vision, you got your price projections, but then if things turn quiet, sour very quickly, then panic kicks in, and you start your mandate or your views start to change very quickly as well.
Yes.
Yeah.
The open mandate changes quite a bit, eh?
Yeah.
All right, let's move on. Ricky is next and writes, I would appreciate your thoughts on VEA as a long-term play. I don't own the stock, but it seems to be performing well until the refinery fire in Geelong. That's interesting. We had this fire, which from reports saying that it didn't do damage or big damage. Again, we're going to find out when the reports come in, or the annual and half yearly. But VEA, another one in the energy sector, oil play. What do you think, Zoran? Long term from here?
I like this one because it seems like it's actually done all the hard yards when it comes to the actual consolidation levels. We can actually see on monthly chart there is a major low at $1.41 back in April 2025. And I actually feel like the stock has done all the hard yards when it comes to creating higher highs and higher lows. And it's broken out of the range quite significantly. And now it's actually coming back to retest those levels, which for me is actually great, because I feel like if you're a trader and you miss this entry, and you guys will know what I'm talking about doing the course, it could potentially provide an opportunity for a re-entry of the stock at lower levels. So, fundamentally, yes, there is some news that are affecting, the stock overall, but it might be only a short term anyway. And on weekly chart, I can see there is a bit of a gap that would be based on the news. And I'd be watching again one of those levels, which is actually around $2.30. If it can hold around here and it can start to creep up again, then I'd be looking at next level around 270, 280, and essentially the next level would be around $3 onwards. So I think it's a great setup. I think it's done the hard yards. I like to see this sort of consolidation and accumulation. Like it's not at the bottom, very bottom, because I can see in 2020 there was actually a major low. But for me, this is good enough.
Yeah, it's interesting. All right, I think for me, watch the oil price as well with a lot of these stocks, because if you look at the way they've been running, they've literally been going in tandem with the oil price. And if oil's peaked, it's going to be an interesting story. Where they go from here. But let's move on to our next question, which is Matt's email. He says, I've come across AUZ. I like the pattern it's making on the weekly chart. Volume is better than most of it. It's been in its 20-year history. The metals and rare earths it's in are in big demand, and the moment for cars, drones and other weapons. Just want your thoughts on this specky. Now, he did also mention, we didn't put it in mentioning today, but he said that he understands. He actually said, give Janine the defibrillator, if I've said that right.
So you've given this stock to me on purpose, haven't you?
So he knows that it's going to be a bit of a specky, and he's well aware. But thoughts?
Fantastic. Thank you for the thought. You're really looking after me, and I appreciate that. I'd actually be surprised with this one because it actually looks quite good. These bottoms across here, it looks like it's the end of a run, that there's a bit of that accumulation happening. And then the positive volume on the rise, plus now a consolidation. Now, we've talked about this on the show before. We showed, if you're trading these smaller cap type stocks and you find these sorts of setups, most of the time they work out really, very, really profitable. And this is what this one looks like right now. And how you trade it, speaking to some of our students and how they're trading some of these stocks, some of them have just thrown away the towel when it comes to trying to pick, because, they used to have the same old attitude before they came with us, that try and pick it off lows and then try and get in that way. There are all sorts of strategies out there, but now that they have proper rules, it's about being patient and waiting for the better entry and understanding that if the stock goes through this level, it could shoot off and you might not have the liquidity to be able to get enough volume to fill your position, depending on the size of the company and what's happening with liquidity at the time. So there are different strategies to use to be able to trade these things. But, I've seen stocks that do this similar sort of pattern that go hundreds of % after making it.
Well, one thing I didn't mention is he is a student, and that's why I think in the specky world there is also some quality there.
He's got the knowledge
you can find that,
to manage the risk.
They're the moments you look at it, I guess, much more favourably than some of the other examples we've seen.
Yeah, agreed. Well, I like it.
I agree with Janina. I think if you take the price out of context, the setup actually looks good on the stock.
Yeah.
But obviously it's a question of liquidity and everything else that comes into it.
All right, well, there you go. You haven't given Janine a heart attack, so good job, mate. But now time for our hot stock tip this week. Zoran, what have you got, mate?
The hot stock tip this week is Worley Limited. Now, before we get to the chart, I wanted to touch on some recent updates with the company itself. Middle East conflict is expected to cut financial year 2026 underlying EBITDA by 30 to 40 million due to project delays and slower new awards. No cancellations, but timelines are slipping as clients defer starts and face supply chain issues. Worley may benefit from the rebuild work and ongoing regional projects, but now sees EBITDA growth as unlikely while maintaining margin guidance of around 9 to 9.5% and targeting longer-term growth in energy and infrastructure. So looking at the chart, it's a bit of a falling knife right now, followed through by fundamentals that are actually kind of supporting the narrative at the moment. But there is still something that I don't really mind about this stock, and especially if you can actually hover around that $9 mark. It's in a downtrend at the moment. It's looking fairly bearish. It's broken through kind of a major low on monthly chart, but the super important one is around $8.80 or $9 mark. If we can hold here and consolidate, then obviously time will tell. Otherwise, my next level of support is around, which is $4.40. That could be quite devastating for the stock, because that would mean a substantial runoff and sell down. But again, it could create good opportunities longer term. On weekly chart though, the picture is slightly different, because we can actually see a pullback after it's created a lower high. And if the price can actually consolidate around these levels and come back and test this around $12.50, then there's no reason why this stock shouldn't go towards the 14 or 13, $15 mark. So I think monthly and weekly chart kind of represent a slightly different picture at the moment. So I would be probably watching for weekly for a reversal, and if it does that, then I'd be doing all my analysis on monthly first for key levels, and then hopefully weekly can actually kind of support that narrative.
Yeah, I just wanted to ask you on that monthly chart, because you've put it as the hot stock, and is some of that with, when you look at the character of this stock, obviously it's been in that big bear market leading into 2015. But when you look at those major points post 2015, it's starting to creep up higher with lows and do some of those moves that often can really, see a huge expansion phase following.
Aggressive growth.
Is that why you've mentioned that $8 mark to say, okay, it's got to hold there, or you're thinking it's just going to pull back to there?
Well, if it does hold there, if you have a look at
it's not falling anymore, it's going sideways.
Yes, but overall the trend is still down from a high back in 2000 and when was it, 2023. And we can actually see a choppy and steady drop in price. We've actually seen that here as well, as it's been consolidating. But what we're also seeing is once the stock does actually create a major low and it starts reversing, like you mentioned, Phil, it actually runs quite aggressively. And I can see a couple of different strategies that it can actually work quite well here. And obviously, if you're undergoing and doing the course and diploma, you would know what I'm talking about. And you can actually kind of make most of those trends that are actually going in the right direction and milk as much as you can out of each trade.
There you go. Watch $8, $9. Now, if you want more from us, check out our video, Thinking of Selling Your ASX Stocks. Watch this now.